What are the 4 things that we can all learn from Charlie Munger, who was a legendary investor and a financial partner of Warren Buffett, a vice president of Berkshire Hathaway, who in 2015 did a $200 billion a year in revenue? Well, number 1, Charlie Munger was an absolutely voracious reader. He dedicated hours and hours and hours every single day to reading, to learning, to honing his investing skills, and to learning about the companies that he bought the shares of, learning about the different investments, and reading a lot. So it's so crucial that you educate yourself about the investment world and what it is that you want to invest in. Number 2, keep it simple and invest in something that you know and understand. Charlie Munger has a very simple and brilliant philosophy that if an investment falls outside of his confidence, that he doesn't fully understand what it is that he's investing into, he would not invest. He would not be interested. So keep it simple. Evaluate the investment opportunities to, number 1, very potential, interesting opportunities that you know and understand. Number 2, simply not interesting, who has too high of a risk. And number 3 is just not within the realm of the understanding. Number 3, be cool-headed and avoid all of these emotions in your investment decision. It's so important to look for the long-term perspective of anything that you invest in and to avoid making irrational, quick judgments based on the emotions and what is going on immediately in the market, because the market can be going up and down and can be crazy and irrational. And some of the best investment opportunities you can find when market is irrational, when market is down, when everyone is fearful. So it's so important to keep level-headed, to see what is actually going on, to evaluate a business, if you invest in a business, to what is actually worth and not what the market is sometimes, just falling unjustifiably. And you can turn those into some of the best investing times, but you need to stay rational, stay unemotional, which is pretty hard to do. Number 4 is you need to be patient and you need to be courageous to go against the herd, against the crowd. You see, when everyone is investing, everyone is buying, chances are the market is already too high and it's not the best time to be buying your investment. But when everyone is selling, everyone is fearful, everyone is negative, those can be some of the best opportunities of your life to buy at the bargain. But you need to be patient for that. You need to get the prices full. And it's like you're waiting in a bus station, waiting for the bus to come. You don't know when exactly it's going to come, but you need to be patient. It is going to come. The opportunity to buy at the bargain price is going to come. And when you hold something and the market is going to eventually go up, that's when you're going to take the profit. So it's a lot about being patient, a lot about being courageous to go against the crowd, against what everyone else is thinking. And that's what made Charles Munger, very successful investment company, Berkshire Hathaway, such a legendary investment company, to adhere it into some of these principles. I heard you learn a lot. My name is Vitaliy, Dubinin, founder of Financial Freedom Blueprint. If you want to get more tips on investing, how you can get to financial freedom, subscribe to the newsletter, and I'll see you in the next videos.